Thank God it's Friday. Good morning and welcome to Friday Business on Business Morning. I'm Ini John Mekwa. Let's head straight to it with oil prices. It looks set to post their second straight weekly loss as prices continues to fall on Friday over demand concerns and skepticism that the United States and Iran could strike a nuclear deal. Brent crude futures dropped 35 cents, that's 0.5%, to $75.61 a barrel, while U.S. West Texas Intermediate crude futures eased 35 cents to $70.94 a barrel. Both benchmarks slid by about $1 on Thursday, rebounding from their earlier losses of more than $3 after the U.S. and Iran both denied a report by the Middle East Eye that they were close to a nuclear deal. For the week, they were on track for losses of about 1% losses after shedding about the same amount in the previous week. Oil prices had risen early in the week following Saudi Arabia's pledge over the weekend for deep output cuts, but they paired gains after rising U.S. fuel stocks and weak Chinese exports data. Malaysian palm oil futures jumped nearly 4% on Friday, tracking an overnight surge in prices of rival edible oils, although the contract was on course for a second weekly decline. The benchmark palm oil contract for August delivery on the Bursa Malaysia Derivatives Exchange gained 126 ringgit, that's about 3.86%, to 3,390 ringgit a ton during early trade. For the week, the contract has slipped 0.39% so far in anticipation of rising production and inventories. Investors are awaiting Malaysian Palm Oil Board, which is due on Monday, to assess the extent of a climb in May production. Malaysia palm oil's production in May is seen rocketing 21% to 1.45 million tons, and that's the highest level since last December. In Indonesia, it sees the European Union as conducting regulatory imperialism with its new deforestation law, but both sides will still engage in talks on a free talk deal. Now, Dalian's most active soy oil contract gained 2.6%, while its palm oil contracts rose 3.4%. Soy oil prices on the Chicago Board of Trade eased after surging 4% overnight. Still in the global space now, Chicago soybean futures are tepid on Friday and poised to post weekly gains amid supply concerns following a drop in total production in top exporter Argentina. Wheat and corn both edged lower. Corn was heading for weekly losses, while wheat was set for a weekly gain. The most active soybean contract on the Chicago Board of Trade was down 0.1% at $13.62 for a three-quarter of a bushel. Wheat was down 0.8% at $6.21 for half a bushel, while corn gave up 0.8% to $6.05 for a quarter of a bushel. For the week, soybeans are up 0.7%, corn dropped 0.6%, while wheat, on the other hand, gained 0.4%. All this is according to the U.S. Department of Agriculture. May soybean report was bearish across the board, highlighting burdensome supply for the new crop, according to a note from commodities research firm Hightower. Well, let's come back here to Nigeria. Now, economists have been meeting to review and suggest way forward for the economy, especially as President Bola Tinubu settles in to work. Well, we do know that they were meeting yesterday in Lagos. Some economists, including the chief economist of the NESG and other chief economists, sat down to put their heads together, look at the Nigeria in figures and the way forward. Nigeria in figures may not look so good, with inflation surpassing 22%, revenue to debt servicing at over 90%, unemployment at 33.33%, among other variables. However, these economists believe that with the right focus, one of which being macroeconomy and increasing supply of commodities, things could be turned around.
But the truth is that the macro is the business environment. It's the major determinant of every aspect of the business environment. Everything is within the macro. right? Whether you are in bank, you are in the bank, insurance, whatever it is, the macro, what happened to growth affects income, to deposit, to making money. That is the channel. Inflation is critical because inflation determines cost of production. And that has implication of risk of default. These are these do not performing. All of these things are tied together. Macro is very important.
Let's look at an household finance. It's not about how much you earn, that matters. It's also how much you are able to manage, how you are able to manage what you earn. So you can earn 1 million naira monthly, and at the end of the month, what is left in your hand is just 200,000. Another person can earn 500,000 monthly, and he's still having something like 300,000. So I'm going to speak about efficiency. It's not. I think we need to shift from just looking for sources into efficiency. It doesn't matter how many sources of water you have, as long as what you use to collect the water is a basket, traditional basket for that matter. You are not going to have enough water. So why can't we look at efficiency at both the mobilization and then management, right? And that talks to the role of non-state actors in revenue collection.
One of the organizers, Mr. Afolabi Oluwokere, believes that one of the needed perspectives is concentrating and working with data.
We think data should be used more to inform policy making and planning in Nigeria. Without data, we can't do much. Nigeria needs data. Data are available. All we just have to do is to bring them together. Very importantly also is that we just enter a new administration. We need baseline data so that we know where we are, how we have been here, and what we can do going forward. So what we have done is that we have put out a compilation of data of Nigeria for many years, since 1999 specifically to date. We also compare Nigeria against some comparative countries so that we can know whether we are doing well or not. It will definitely serve as a good baseline data for the new administration. It will also be useful for businesses who want to measure and monitor performance of public sector as well as private sector in Nigeria.
Talks over, getting the attention of the government, and implementation should be followed up for maximum impact. Nigeria in figures, Nigeria in reality. Well, let's talk more about that with Dr. Yemi Khaled, the chief economist with KPMG, joins us virtually from Lagos. Dr. Khaled, thank you so much for your time and good morning. The reality of Nigeria this time is inflation, and FDC has even said it's going to go even higher to 22.7. We're expecting numbers. You used to be at the MBS, so you know some of these things even better than I do. So 22.2 to now, expected to go 22.7 if FDC's projection is correct. And this may even get higher than this with the removal of the subsidy, as we have seen so far. For you, how can businesses hedge at this time? How can they protect themselves and survive these trying times?
Well, I think for 2023, anyway, businesses had already prepared their strategy for the 2023 financial year. And of course, this came as a surprise. Yes, politicians, government had been talking about removing the subsidy for a while, but I don't think a lot of businesses took it seriously. It's not the first time that government and politicians have talked about removing subsidy. So they are planned, whether it's households or businesses, they have not really factored this into their plans, and it's going to be a serious challenge for them, especially for micro, small, medium-scale enterprises. Unlike the larger ones, they are less likely to, they use a lot more PMS in their operations, unlike the larger ones that use more diesel, more gas, and so on, and a lot less PMS. But the micro, small-scale enterprises are going to be more affected by this, because they tend to use more PMS. They also are smaller in scale, so they don't have the opportunity like the larger ones to also push in the impact of the shock. At this point, I think what needs to be done, as far as businesses are concerned, they're going to have a shock on both sides of their businesses. One on the demand side, because obviously, their consumers are having their purchasing power reduced. So as a result, they'll end up demanding a lot less of their products. So they're going to have declining sales, but at the same time, they're having increases in their cost of production directly from the increase in the PMS, indirectly from transportation costs. And there's even a chance that their staff might demand higher wages to cushion the effect of the PMS increase. So they're having higher costs, they're having lower demand. It's a very challenging period for business in the country. I would say, in my opinion, the way they can hedge against these challenges would be to, on the income side, maybe expand the level of opportunities they have, the different business lines, see if they can get any additional sources of revenue. Again, that applies to households. Find new areas, expand, diversify your income streams across various businesses so as to be able to hedge against this risk, preferably in the production of the provision of services that are non-discretionary by nature, which means that consumers have no choice but to consume those commodities. So they'll have a lot less impact on their earnings. At the same time, be more efficient with the expenditure profile. Cut out any discretionary expenditure that you can cut out, be a bit more efficient in the way you spend money, in the way you move your goods and services around the country. So much more efficient expenditure, much more efficient expenditure structure, and expand the number of earning opportunities in your businesses. I think this is probably what whether large, small, or medium will have to do in the short time to cushion the impact of this the almost 200% in some cases impact of the PMS increase. Nevertheless, I still believe that it was the right decision. It had to be taken. It's a pity that we had to wait till critical. It became very critical before we took it away. If we had taken this away many years ago, we wouldn't have this kind of a shock to the economy. But at the end of the day, it's better to eventually. It's a good thing that we eventually got rid of it.
So I do know that during COVID, the challenges that came with the pandemic was a necessity and also birthed a lot of inventions and innovations for businesses. Some businesses who used to import some raw materials, started looking inwards, the domestic value chain and all of that. Do you see any of this happening as a strategy for businesses to survive?
Well, not because as a strategy for business to survive when it comes to lack of, in terms of PMS, that's a domestic challenge, a domestic cost of production issue. And it might get to a point where those domestic raw materials are even more expensive than important substitutes because of the rising cost of operations in Nigeria. So I'm not sure if looking inwards, trying to get domestic alternative is the issue here, because the issue is not a lack of foreign exchange. The issue is more increase in domestic cost of production, which will affect every operation in Nigeria. So if you are sourcing for local materials domestically, it's going to affect your costs are going to be affected by the cost structure of those raw materials that you are trying to get from domestic players. So I'm not sure if that's the best alternative to handle the increase in subsidy. I would say that it's maybe one of the options to handle maybe the potential inflationary impact of the unification of the exchange rate if it is done or when it is done. But that would not necessarily solve increase in PMS cost. I think finding alternatives to PMS in terms of running your business, whether it's alternative fuels, whether it's moving to gas or diesel, which larger corporations already do, might be a better alternative rather than trying to source raw materials locally in an environment that is already highly inflationary.
And, along that line, we see the Lagos state government, they talked about the electric bus, which is supposed to start operations soon, hopefully. And then we also heard the Ogun State governor also talk about bikes that are supposed to be run electrically, I think. So these could also come in and hope that they would be affordable for businesses to be able to adopt it and maybe ease off on the use of PMS.
Absolutely. Like I said, that's the way to go. Find alternatives that are even better for the environment. They are cheaper. They create more jobs in the process. I think that's the way to go. rather than relying on PMS. I don't expect any significant significant is the keyword, changes to the price of PMS in the short to medium term. So yes, adopting efficient alternative measures for production and for providing goods and services, I think that's the way to go. Mass transit scheme. I also think that if government wants to introduce palliatives to cushion the impact, which is exactly what they say they're going to do, I believe that it's better to use non-cash-based palliative, because you don't want a situation where you are offering cash-based palliatives to take out the sting from higher inflation, and then you're adopting measures that even make the inflation even worse in the process. So non-cash based palliatives as much as possible. I would prefer things like tax cuts rather, instead of giving cash to individuals, because one just increases money supply while the other doesn't, but puts you back on the same level in terms of purchasing power. The use of transport vouchers, like electronic transport vouchers, for example, using the savings, if we can call it that, to pay off debt and put less pressure on the revenue profile of government. I think these are more useful ways to cushion the impact on businesses, to cushion the impact on households from this, than just giving cash, raising salaries, and things of that nature.
Talking about raising salaries, do you see this maybe bringing back the popularity of working from home? Because that would obviously reduce transport costs, so you might, deal with the desire of workers to ask for higher pay.
Well, that's one way of looking at it. From home, that's what we did during the COVID era, and some people would actually suggest that they were more productive during that period. But that does not remove the entire cost. That cuts out the cost of transportation, but it also the increase in PMS also affects the prices of food and non-food. So yes, you might get households' transportation costs to go down because they don't have to buy petrol in their cars or go into public transport. But at the same time, the impact of inflation, whether you're working from home or not, you're still going to have to pay those additional prices, and then you have that indirect impact coming in that will require again increases in wages, for example. So yes, that's a good. It's a good idea, but it doesn't entirely take away the impact of the subsidy removal from constraining purchasing power of households and businesses.
All right. Finally, before we let you go, Mr. Kale, now let's get your projection for inflation. We expect inflation numbers next week. FDC sees it at 22.7. Where do you see it?
Well, our own estimates are somewhere around that level as well for June, and that's because the impact of the fuel subsidy would not have impacted the results because they came after the inflation numbers had been collected. So for the next month's inflation, yes, my estimates are very much in line with those. But for the month after that, I'm expecting a 4 or 5% rise above whatever comes out next week as a result of the increase in subsidy. Many people think that's a bit extreme, but I'm not entirely convinced. I guess it depends on how quickly the negative impacts of subsidy on inflation passes through the different commodities, goods and services in the economy. The 4-5% might even be in August, but I expect that next month or the month after we might see 4 or 5% increase over whatever the previous month is. So for next month, I think my estimates are more in line with those estimates that you gave from FSD.
All right, thank you so much, Mr. Yomi Kale. We'll certainly wait next week, see what the inflation number comes out at, and then we will add 4 or 5% for June and August. Thank you so much for sharing your thoughts with us this morning, Chief Economist of KPMG. All right, now let's take a break, and within that break, we would tell you how Flour Mills is appreciating their clients and customers. That's in this break. We'll see you on the other side.
Flour Mills Nigeria PLC, which prides itself as the largest provider of daily home and cooking products in Nigeria and beyond, has brought together dealers, customers and partners who have contributed to the growth of the company through its B2C sales and marketing integration initiative.
And let's continue to support and drive FMN to the heights that we all believe it should be at.
Dining with its partners has become a yearly routine for FMN PLC. 2023 is not an exception. At the event holds at Eco Hotel Suites, Victoria Island. Highest dealers of different products across the region were recognized, and some of the awardees commend FMN for the support to pull through the challenging business environment. Top 10 dealers are also specially recognized.
They have a product that being acceptable in the market. They have a product that gives you highest return on investment. They have a product that continues to encourage you to do more. You can see a lot of money that given to dealer today. Last year they gave me a community project that made me to have a classroom in the federal pool in Ogbomoso, and now they are giving another one that's going to cost almost 25 million naira to do. Those are the things that are encouraging us to do more FMN.
After over 60 years, the company says it is determined to support its dealers.
We're clear that when the dealers grow, FMN grows and vice versa. So we come together every year and we share ideas and we consider how we can do things better together, because stronger together we're going to create an even brighter future for our companies and also be true to our purpose of feeding the nation every day.
So we deem it fit every year to sit with our dealers, break communion with them, look at our performance for last year, then set the tone and the agenda for a new year. In the coming days, our dealers should look forward to investment heavily behind our brands in terms of our A&P spend, investment behind our route to consumers, that is taking our products into different channels and segments across different geopolitical zones in the country, investment in terms of support, looking at the turbulent macroeconomic indices around us.
Flour Mills Nigeria PLC says it's not resting on its oars as the top leading food company and will continue to work collectively with its partners to sustain its wide reach.
Welcome back to watching Business Morning on Channels Television. This is The Other Side, and now we're talking about e-hailing drivers. Under the aegis of Amalgamated Union of App-Based Transport Workers of Nigeria, they started a strike yesterday and it continues today. Bolt still maintains, their complaint is Bolt still maintains 25% commission with just 100 naira increment with this present price of petrol, obviously connected to that petrol subsidy and the new price that is in operation at this time. We have joining us here in the studio the General Secretary of that union, Amalgamated Union of App-Based Transport Workers of Nigeria, Mr. Ayuade Ibrahim. Thank you so much for your time this morning.
Thank you, Ma.
So tell us, what's the problem? You have 25% commission. I think you said between 25 and 30% for app-based transport operators.
Exactly. There's a subsidy now, and the material...
No, first, help us to understand the 25% commission.
Fine.
You know, a lot of people do not really... we just get into the car, use our app, you know, so help us to understand.
Yes, the 25% is the commission the app company remove through our trip. Each trip, we pay them 25% as a commission, and that is what they remove from our income. Okay, so from every trip you make, you pay the app... The company 25%. Yeah. 75% is for you to sort out your logistics and your own revenue. Yes, exactly. Okay, so what do you want now? What are you guys asking? We need 200% increment on our income, so that if they can go down on their commission, like 10% flat, which is reasonable, and the customer will pay less, and the driver will hire more. Because when you look at the bill they give to customer and the money that come to us is not commensurate the amount of money the rider, which is our customer, paid. For example, maybe you are taking the Uber, you understand what they call booking fee, and 20 naira charge for the road development in Lagos. So all those factor in on the work we are doing. So at the end of the day, the commission take which amount of money from our income. And that is what we are talking about. But they are trying to blackmail us that we want our customer to pay more and they cannot increase. And that is not correct. Because in our industry, there's a lot of hidden charge and hidden income to all these app companies. For example, you are using to Twitter, Facebook,
They will not ask you to come and pay subscription before you upload whatever. The same thing in our platform. In Lagos State alone, we moving 1.5 million customer a day. You can see the kind of data and the crowd we pull into their platform. And they will get to the advertisement money on those areas. That is one aspect. Another aspect is vehicle inspections. We have our own roadworthiness with government certifications, and they still have their own roadworthiness on their companies. And there's a time we argue about it. I don't have problem for you to test my car in your platform. It's your company. You have right to know the kind of car I'm taking to your company. But it's very wrong of you to charge me again after I've collected the roadworthiness from the government that is authorized to do so. These are the arguments. Okay, so you're saying that, they have other avenues with which they make revenue. Exactly. So with this one now, you're not asking that fares be increased. You're just asking that their percentage be reduced. Normally, in a normal way of doing things, you see all these influential in the social media, Facebook, or what have you. What are they using? You have 1 million followers in your Twitter. So you have advertisement, you get money. This is what all those influencers are using. But what we are trying to tell them that if I thought you cannot give us share from all those data we pull every day, why can't you just go 10% on your commission so that our rider will be okay and then we too will be okay? That is what we are saying. And the issue of the inspection of the vehicle, fine, you can inspect my car, but you don't need to charge me again. That is the aspect that we are trying to let them understand. So you people are on strike now. You started strike yesterday. No, we started 3 days ago. Okay, so how long is this going to last? It's 1 week for warning strike. Okay. So after the 1 week, One week expires when, please? We expire on Sunday stroke Monday. Okay, so by Monday, will people be able to hail you? Yes, our member will go on Monday. But what we do is that if the app company did not yield to what we are trying to do, they will convert most of their customers to offline. Yes. So if that's what they need from us, I wanted to ask that. So because they're ready to block everybody, so that all of us will eat it as offline. We have data of our customer. They should not think we don't have data. We have data. And they should not play with us this time around because before, this is 7 years on this struggle. 7 good years. We used 7 years to get this union done. And they have leveraged on divide and rule. But this time around, nationwide strike, acts of Calabar, acts of Kano, Warri is there, acts of Port Harcourt. I can forward all the video, all these things for you. As I'm talking to you here, there are going to be a protest in the Uber office, in post office in Lekki, as I'm talking to you now. So we are not playing this time around. You see, the problem the hack company has. But are you having conversations with them, or you're just down tools and? We have conversation on them, and I will tell you, our industry is very, very technical. Gig economy. It's not only Nigeria. And the beautiful thing about Nigeria is that we are the first in Africa that, give union to gig workers. If you reconnect, the ministers of labor by then, former minister of labor by then, Igege, he made mention it on that day that is giving us a approval letter that, look, the ILO, that International Labour Organization, have mandated all the country to formalize informal sector. We are informal sector, for God's sake. And on that basis, so we have attachment now to have a union to do collective bargaining on the commission we are talking about, on the price mechanism, on how they use our data. As I'm talking to you now, I'll just come back from South Africa because we lead Africa, Nigeria lead Africa on this gig economy. So I educate them and because interchange ideas. So now the next month I'm going to Kenya to still do the same thing. So it's not about Nigeria. Nigeria should not fail Africa because we are the one that want to pave way to Africa concerned to this gig economy, especially the right of the people that are working there. So it's not a joke this time around. We know what we are doing. I was part of the people that is negotiating internationally with OECD in Lebanon, and because in 2019, all of us globally, India, America, everybody, we met in UK to have an organization called IATW, International Alliance of Air-Based Transport Workers. So we are collectivity. Globally, have input on the European Parliament in the sense that they want to do all this regulation for the European industry and what have you. So we are not joking. Nigeria is a base of, or no, is a face of Africa concerned to gig economy.
You people are serious about this.
Yes, we are serious about it.
So after 1 week, if you don't get positive response, you go back to work normally?
I told you that we go back to work with the condition to tell our member that, look, if you want to block everybody, block us at data, we convert all their customer into offline. They should be ready for that.
Wow. Okay, but I mean, don't you see, I mean, are you ready for things like legal action? Because I know you do sign contracts.
In 2018, we have illegal actions in industrial courts, but the action is at Igbo Court of Appeal. We are waiting for the verdict for that one. So we are not joking. We bring everything together. I told you 7 years of this struggle. It's not a 7 days.
You have gathered experience,
Yes.
And you have traveled everywhere now.
Yes, yes.
Anyway, we do wish you the best, and we hope that it ends amicably for everybody, because, I mean, these companies we talk about, they also employ Nigerians who are earning salaries from there. If they don't make revenue anymore, it will also affect some of our family members. So it's a circle at the end of the day. So we do hope that there'll be amicable solution exactly to it. Thank you so much, Mr. Ayode.
Thank you so much.
General Secretary of Amalgamated Union of App-Based Transport Workers of Nigeria. Wish you the very best in the struggle.
Yeah.
Let's take a break now. When we come back from that break, we'll head to the market and the UK to stay with us. Welcome back. Market time now, and we head into that with Will Ibong. I think she has the bonds on the screen.
Yes, I'm talking about the fixed income today. We did have that NTB primary market auction on Wednesday. We're going to be discussing it. We did see an increase in the 1 year paper. That's very good news for investors.
So investors are beginning to think maybe the federal government is now ready to fund the budget deficits now. Let's see.
Let's hear what the analyst says about that. So the bond market traded with bullish sentiments as enough buy interest yesterday. So we saw yields going down. Average yield fell by about 3 basis points to 13.7%. Across the benchmark curve, we saw a drop in the average yield at the short and the long end of the segment, but it was, flat in some areas due to bargain hunting in the 2024 and the 2034 papers. Now, if we look at activities in the NCB market, that's the Treasury bills market, it also turned bullish as market players sought to fill the unmet demand from the NCB auction conducted yesterday, and this bullish interest was seen in the newly issued 1 year paper, and with trades consummated around the 8% levels. But we're going to be talking to now Chuka Nwachukwu, who is the head asset and liability management UBA, to give us more insights as to what went down on Wednesday and also an outlook for the week. Good morning, Chuka. Welcome. Chuka, can you hear me? It's good to have you on the program. Chuka, let's have a look at the results of the NCB primary market auction on Wednesday. We did see that uptick in the stop rates for the 1 year paper. How much higher should we expect rates to keep going now?
Okay, thank you very much. Like you mentioned, we had the NTB auction on Wednesday. 182 billion was on offer and sold. It was oversubscribed by well over 815 billion. And so this has actually affected the trading on the secondary market, where we've seen this we've seen this 1 year, for example, which closed at 9.45, currently trading at 8 levels, like you rightly mentioned. The system is also still awash with liquidity, and that has affected yield. So we've seen yield nosedive to between 150 to 200 basis points from Wednesday to today.
So how are investors going to benefit from this if we still have the system awash with liquidity? How do you see the week? Maybe what market players will be focusing on later today, especially with liquidity still so much in the system? Do you think the CBN is going to mop up more funds from the system?
Yeah, on the investors, how they can benefit from this. If you buy 1 year at 9.45 and it's currently trading at 8 levels, and that's a huge investment and a positive for the investor. The liquidity, like I said earlier, persists, and this will also bring in a whole lot of bullish sentiment into the market, and so we see further crash in the rate. On the CBN side, CBN this morning has done the normal discretionary CRR debit, and so, but then we still expect to see most of this liquidity remain in the system. That will also affect the bond side. Like you mentioned earlier, we've seen activities on the shorter end of the curve to the longer end of the curve, the 2025 and then 2026, as well as the 2049 and 2050.
So what do we expect the market to trade with? It's still going to be, you mentioned bullish. For the next week, are we still going to see bullish sentiments play out in the market?
Yeah, as long as the liquidity remain. And also, this is an interesting period for the investors. Like you mentioned, the government is looking to fund the budget deficit. And then most of this borrowing is going to come from the local market, especially the T-bills and the bond side. So we expect to see more elevation in the yield in the next few weeks and a few months, and we might see the double digits of around 13-14%, depending on the side the government is looking at.
Thank you so much, Chuka Nwachukwu, the head asset and liability management, UBA. Thanks for sharing those insights.
Thank you very much.
So if we look at the equities market yesterday, sentiments were negative. We did see that 0.12% drop. And we've left the 56K level right now. We're now at 55,956 points. Market cap, however, is still at the 30 trillion naira mark. However, month to date and year to date are still in positive territory. No brainer there because the market is still very positive. Now, the total volume increased by 33.7%. If we look at turnover for yesterday, all in the green, 531.79 million units traded yesterday, valued at 7.69 billion naira, and all consummated in 6,062 deals. Cross sectors, insurance and oil and gas were in the green, but consumer industrial, those indexes were in the red. The segments are doing well. Banking is just coming back up. They go down, they come back up because they're here to stay. UBA drove that sentiment yesterday for the banking index.
It's the most liquid. It's the most liquid counter. So we expect it to be very active, and that's why it's my favorite.
Oil and gas has been doing well for this past.
They did say,
yeah, so I think we should just move over.
No, I am very loyal.
You're loyal?
Yes.
I think you said loyalty.
No. I'm fine there.
Okay.
Subsidy we will adjust and we'll be fine.
Okay, but I see that level maybe moving higher. So I think you should just take position.
Well, you could also move to insurance. It's about 4% up, and let's see how you would do right there.
Oh yes, we'll look at that.
All right, Will, thank you so much. Let's move over to London now, London studio, where Juliana is standing by. Juliana, good morning. Now, we're talking about windfall tax again, and there's an if there. The government is thinking of scrapping windfall tax. What are the conditions surrounding this?
Good morning, Innie. We're going to have to wait and see because we know that energy ministers are going up to Scotland to meet with bosses there who are not happy with the energy profits levy, also known as the windfall tax. It was introduced probably about this time last year by the Prime Minister, Rishi Sunak, who was, of course, then the Chancellor of the Exchequer. There was so much political pressure on him to put this tax or this surcharge on energy companies who were obviously profiting due to the war in Ukraine at the expense of beleaguered Britons who were going through a cost of living crisis and having to determine whether they were able to heat their homes or put food on the table. According to the then Chancellor, it would have produced about £40 billion in the coffers in 6 years. And then when the new Chancellor, Jeremy Hunt, took over in November, he raised the levy from about 65% to about 75%. And that's wherein lies the problem. We've had a slew of pretty salacious headlines from energy bosses working within the North Sea, particularly Sir Jim Ratcliffe, who spoke to the Financial Times last month. He is the owner of the huge petrochemical company Ineos, and he basically said that the levy is making it really difficult for bosses to to be able to invest back into the area. So there's lots of options on the table. It won't be removed. It can't be, because that would be a political headache for the Chancellor and the Prime Minister. But what they're looking to do is put the bosses around the table, find a way forward so that Britons can benefit from the extraordinary profits of the likes of Shell and BP, but not make it too high to deter investment in the region.
I can tell you, Juliana, back here in Nigeria, equities, the oil and gas stocks are really making it this couple of days since the removal of subsidies. So I don't know if they'll think of a windfall tax here, but there's a report that's comparing prices in the UK and EU and saying that, little basics like butter and ketchup are more expensive in the UK than others. And we do know that the EU, the zone itself, is in recession at this time. What does this tell us, in comparing these prices?
Yeah, it's pretty interesting, actually. This report, this analysis and conclusion is down to the BBC. They've been looking extensively at prices across British supermarkets and on the European continent, because, as most people know, we are going through a pretty deep, expensive cost of living crisis in the UK, the highest we've had in about 40 years. Inflation just below double digits now, but if you look at food inflation, it still remains at a 40-year high. It's about 17.5%. So they've been analysing different prices, I believe, for 23 products, both food and non-food items. And they have found that Germany is the cheapest. So if you're living in Germany at the moment and you want to buy toilet roll and ketchup and other items, it's much cheaper to buy them there. And the most expensive country in Europe to buy these basic food items is France. Britain comes somewhere in between. So just some insight for you. It cost about £3.80 for loo roll, which I believe is about 4,000 naira. Yeah, 4,000 naira for four loo rolls. In the UK, it costs £2.66 in Italy and £2.87 in Germany. So it's pretty expensive. So if you are obviously holidaying in Europe and you've got some extra space in your luggage, it's probably best to bring it back and you can save a couple of pennies. All the pennies do add up, as we know, Innie.
Yeah, Juliana, but I can now say, Juliana, you're not an ordinary person like us for you to be surviving over there. So that's what this also tells.
I'm not ordinary, but you're extraordinary, Innie. You're my Oga, of course.
All right, Juliana, I will talk to you at 1:30 during Business Incorporated.
Talk to you then.
All right, so let's go to the crypto space now. And in the absence of Lad Williams, I have to take this on. So let's do this the best way we can. Looking at the numbers, the Fear Greed Index is just in between uncertain at this time, half 50, neutral, neither here nor there. We know that this market has been hammered by that move in the United States, where the US Binance, has a lot of questions, loads of questions to answer. Let's look at the prices now, just before we see update on that. Bitcoin this morning is less than 27,000 now, even though it's added 0.51%, 26,491.37, a change of 0.51%. Ethereum Ether is 1,838.53 there. BNB also, we see some additions there, positive changes. Cardano, however, is on the flip side, almost 2% down. XNP at 0.54%. Let's see the top gainers, the top losers for this morning when we took this number. There you go. Single digits gainers there tells you that it's not a lot of movement. But we're supposed to have Gilbert Jopata now tell us to give us his observation for the price movement this week in the midst of this Binance US brouhaha. I could say. Hi, Gilbert. Good morning.
Yeah, good morning, Mrs. Innie.
So I know you've been following the issue with the US Binance. How much? Because I know it's obviously has had a lot of impact on price movement for the week. How much and what side have we gone past that sentiment, surrounding reactions to all of that? Have we gone past that when you look at the price movement for the week?
I think it was quite an eventful week for the market with regulatory clampdown as this that saw the market nosedive to about 25K. But beyond this, I think investor sentiment became stronger than I really expected, because despite the SEC action, we are still bullish in my view. The SEC actions were quite expected because I know they need to extend their tentacles of regulatory control with the CBDC also on the way. And while technically news like this did not really cause a major decline or damage beyond a market structure level. We tested the 25K held, even though we due in that structure, we could still see 22, but we held in 25. And technically, when major news like this, bad news don't cause major damage in levels, market structure levels. It's a technical sign that the bear market is over. I still expect regulatory clarity from the SEC because we are still yet to differentiate between what currencies are, what security or commodities are. And I typically understand because crypto is the first asset class that is showing future of both security, commodity, and a currency at the same time. But I still hope that the SEC will bring more regulatory clarity and work with understanding with crypto capitalists. Because I saw this data that showed that traders are actually leaving the United States. So I think it's of economic interest that there is more regulatory clarity while they still try to extend their dominance and control over the market.
But Gilbert, do you see other countries, following suit? Because I've listened to conversations on this like all through the week. We have some traders also excited because when you look at some of the allegations, on Binance US and all of that, certainly that clarity and regulation is needed. And we did talk about the need of regulation of crypto all around, not just in the United States. Do you see other countries perhaps towing this same line of action?
Okay, there is really a mixed crowd in the cryptocurrency space. One of the crowd is, the original idea is more like having private issued currency and asset out of the control of the government. But the market has grew to a point where we cannot overlook the need for regulatory regulations in the industry. So why this is the case, I see also other countries also building regulatory framework, but they are not, the regulatory frameworks are more friendly because we also see countries also who have regulations, but these regulations are very, very friendly and inviting for crypto capitalists into their country. And this is really a boost for their economy. And while I still expect that the United States have always been a major player in terms of capitalism, I expect that there should be more of a roundtable discussion with capitalists there and not really make policies that may stifle innovation and cause a major migration of crypto capitalists from the United States to other countries. And other countries are watching, so when they see how economically the market will react, they will also understand that even though I still expect other countries to bring out more regulatory framework, I think it will be more friendly when they deal with crypto capitalists.
Yeah, well, I can't let you go without talking about Nigeria. After all, we're in Nigeria. Nigeria is our first point of call. And we do know that in the 2022 finance bill, crypto transactions are supposed to be taxed, even though the CBN is not very friendly, towards crypto. What do you see? Do you see government attention turning there? Do you see regulatory authorities and, guidelines also coming up when it comes to crypto in Nigeria? Hello, Gilbert, can you hear me?
Framework by the SEC, and we also have the new policy that makes blockchain and its components legal. But beyond this, I think we could do more as a country because if we can take advantage of a technological and financial revolution at a time like this, with all we are the second largest provider of liquidity in the world, which means that, look, the liquidity is here. And as a government and as a nation, we could also take advantage of what is happening from what I see young Nigerians also building the blockchain industry. We need more regulatory clarity and framework, I must say, and also government presence on how it will not just be crypto entrepreneurs taking advantage, but as a country, we can also position ourselves to be economic leaders as well with this new fast and emerging industry that is actually taking the world by storm, both technologically and also economically. We could take advantage. So I think we are doing well, but we could do more and better so we could compete better at the global world stage.
All right, thank you so much, Gilbert Joe Pata. There, we do know that President Bola Tinubu, in some of his campaign promises, also give attention to blockchain, and the digital economy. So we will see how that comes up. Thank you for your time, and have a great weekend.
Yeah, thanks for having me.
All right, we'll be going now, but let's just see the top losers so we will balance it up, not have just the top gainers. So these are the top losers, not so big. They are -3 for SUI, FXS, Cardano there, Nexo and Amiota. These are the top losers for this was about 8:30 this morning. But that's it on the program. So when I close the stop, that's it for this week. Business Morning will be back by Monday. But 1:30, I'll be back with Business Incorporated to give you an update from the world of business. Laddie Williams will be here 7 p.m. tomorrow. All the summary, everything that happened in the market this week, he will bring that to you. So I'll see you at 1:30. Talk to you later.
Stay connected to the world.